Hello and welcome to Streetwise Economics Weekly podcast, where Coach Blooming and we talk about what's going on in the markets, particularly Canadian and US stock markets. We also explore other market influencing events where they arise. So please help me welcome my friend here, the trusted money.
This week has been really, really crazy. I'm excited to be on this podcast again. Let's just talk about what's going on in the market. Again, these are just two friends talking about what is going on in the market, and nothing we say should be taken as investment and financial advice. So, over to you, buddy.
Wonderful. So quickly, in terms of the major highlights, Coach, you are very good at summarizing this. Do you want to take us through what's going on in the equities market, particularly the US market, and also, the crypto market? And then we are going to talk about what we think for people who are maybe outside of, like who are on the sidelines, who are not yet invested, what we think. And we'll talk about, for lack of a better word, it's not predictions, but what we think in terms of the market outlook, because it's extremely difficult to predict correctly, the direction of the market, especially on the short term. Coach, do you wanna walk us through that?
Yeah, so as I said at the opening, that the equities market, meaning that if we look at the three major indices, it's been green for the most part this week. Like it's been going up. We're seeing a lot of companies, Nvidia reaching even another all-time high. We're seeing Palantir, we're seeing the S&P 500, the Nasdaq, the Dow is just going up. And for people that were buying during the April lows, I'm sure that we are just smiling as we see our account even swell. But even apart from that, we've been seeing a lot of major things going on. I think earlier this week when there was rumor that the president was going to fire Jerome Powell. And I remember that morning the stock market it just took a little bit of dip. And the moment that Trump denied that, hey, there was nothing like that, that he was not going to fire Powell, we saw the market just quickly recovered. But apart from that, we're seeing a lot of earnings this week. Companies has been beating earnings. We saw the banks, JP Morgan Chase, Wells Fargo, Citigroup, they did really, really well this past quarter. But even despite all of that, if we look at what's going on in the equities, in the crypto market, we saw that Bitcoin reached about $123,000. And again, we're even seeing Ethereum, which is the second largest digital asset by market cap, to, I think it went from 2,400. The last time I checked, is now around 3,600. So again, the market is just taking on a lot of risks right now because we're seeing a lot of our portfolios just rising. But even apart from that, I think this is setting us up for an amazing 2, 3 years. But again, I expect a lot of corrections along the way because when I looked at the fear and the greed index, it was just literally in the grid. Same thing for crypto. So again, as excited and as bullish as I am, I'm also on the cautious side that hey, the market is going up, but I also expect some volatility to the downside for the short term. So over to you.
Thank you for that nice summary, and I couldn't agree with you more. I think for me, the way that I'm looking at the market is like, timing the market usually beats trying to time the market. I think that was Peter Lynch who coined that term. What am I doing? I started kind of like opening positions on the VIX index using cash secured puts options to actually even getting lower. In other words, it will act as a hedge. If there is something that's potentially going to happen, I'm going to make a lot of money. But again, I even started buying the shares for the VIX ETF. And this is not investment advice. This is what I'm doing, what I'm comfortable with. I'm going to start buying, loading up. And for my position that I want to kind of like get in a quarter of the position, like I usually for the quarter of the portfolio. And then I will split it maybe into like 5 tranches. So I can put, you know, 20%, 20% if it goes lower, and these options that I use can potentially, uh, you know, enable me to get in at a much lower price. Now, should the market go up, if I have cash secured puts, it means I'm just going to collect premium. So that's how I use to pay myself some dividends. So that's how I generate cash flow. So I don't really care if the market goes up. In that regard, I will make money. If it goes down and even below the strike price that I choose, I'll still collect the premium. If it goes lower than the strike price, I will still get in, but at a much lower price. So that's the deal. Now I have a few other undervalued companies that I've been, buying that are, down, and here and there I kind of like have some swing trades that I get in and get out. And I have a bit of cash. I always want to have the flexibility. I have been learning from the best people like Warren Buffett. It sometimes doesn't make sense to have a bit of cash, but I like the flexibility of generating cash flows, still being able to make money even if the market drops unexpectedly, because now when the time the S&P 500 and the major indices have been hitting all-time high, there's no supply zone. In other words, where there are no sellers, there are no previously reached levels. So what's most likely going to happen, people? It's psychological. Sometimes it has to pull back. When it pulls back, what it usually pulls back, that's when the VIX, usually goes up, and it could be because of anything, right? But nobody can predict the market. We have been clear about that. The market might continue to rip up. It's psychological, especially if most big institutions were on the sideline. But I think they are already in because they have the bandwidth to push the market up. Retail traders or investors, yes, we can, but if we act in consortium, right? So that's something that I can say. Now, in terms of someone who has not yet invested, coach, I want to pick your brains on that. Is this a good time to start getting in, whether in equities or in stocks? And you can, just explain, because usually every person is different. It's not investment advice, but it's what we are doing as we wrap up.
Yeah, so again, for someone that is not even yet participating in the market, I always like to emphasize the need to educate oneself before jumping into the market. But is it too late to get into the market? I honestly don't think it's too late. The reason being that waiting for the perfect time to get into the market is not always the best strategy. For example, some of the things that we've learned even as retail investors is like if you want to participate in a security and you have about $10,000 to deploy, maybe you can just start deploying $1,000 so that you don't feel left out, so that you don't feel like, oh, I'm waiting for the perfect time. Then that can be like a benchmark, meaning that if the price then drops further, then you can just average down. But one of the things that I have been doing personally is that if I see a security that I'm interested in and I've done my research, I've done my due diligence, but it's not yet at my strike price, then I would just set up series of limit orders to just make that happen when the market drops. A classic example is that of Meta Planet. I've been looking at Meta Planet for the longest time, and this week it dropped below my desired entry level, which was under $10. So I picked up some around $9.50, another one below $9, and I have another one around $8. But again, for somebody that is not yet participating in the market, I would say educate yourself first, then just start participating, start buying. Because why? The longer you stay out of the market, the more you lose, because the moment you start participating in the market, you are going to start learning because your money is now involved. You're going to start having a lot of emotions if you see your portfolio go up or down. That is what comes to being part of the market. Like it comes with the territory, learning how to manage your emotions even when you invest. So for me, Meta Planet is one of the plays because this is a crypto play. Again, it's not specifically crypto for those that want exposure into Bitcoin without necessarily buying Bitcoin. Then you can get into equities that have exposure into Bitcoin. The same thing for Bitmine immersion. I'm considering getting into Bitmine immersion now that Tom Lee and even Peter Thiel they are into Bitmine immersion. There's a possibility that I might get into, but it's not yet at my desired entry price. But apart from that, every other security that I own is just for long-term investment, whether it's Palantir or Nvidia or Tesla or MicroStrategy. And yeah, so, but that's my take. If you're not yet in the market, educate yourself, get started. Don't wait for the perfect time because waiting is even riskier. So over to you.
Right. That's the wrap for today. And if you want to learn more about investing, trading, feel free to reach out to myself at www.streetwiseeconomics. My colleague here, her website is wonderful. She also has an upcoming coach. She's reachable at bloomingumorin.com, www.bloomingumorin.com. I'm gonna put our respective websites when I edit this video. So until next time, like we always like to say, trade and invest wisely, and may the market be on your side. Coach, your closing remarks as we wrap up. I'm out for now.
Yes. So as we always say, may the market be in our favor and keep keep investing. Don't stay out of the market. The market, we always pray that it works for our favor, but again, may the market always be in our favor. We'll see you next time.